Alrighty, traders, this is Blake Morrow. You are listening to the Morning Edge. I hope everybody's having a great trading session. And you know what? My goal here is to just get as much of this analysis done ahead of the open. Or just remember, it's North American Open. U.S. traders are sitting down. U.S. and Canadian traders are sitting down. They're getting ready to bid up the equity markets. So that's what happens around here, right? So, I mean, the S&P's had a little bit of a pullback, but like I said earlier today on the FACE webinar, I'm not getting excited about any potential lower highs here until we start taking out some support. So that comes in at 39.40 and 4,000 will be, whoops, that's what I want to do. 4,000 is the resistance here. That'll be the resistance right here, above these highs. Then I'm going to write down 4,030 after that, just in case we break higher. And again, I'm not even thinking anything else unless we break below 39.40. Now we break below 39.40, then I'm gonna get excited about some other things, like as you guys know, the dollar Canadian. I mean, look at the dollar Canadian probing up here into resistance. It is holding up very well. Support right now for the dollar Canadian is going to be 127.70 or 125.70. I'm sorry, 125.70. It's going to be these supports down here, but more importantly, this trend line and these lows. So that's going to be around 125.70. Resistance right now, whatever the highs are. What are the highs? 40. Yeah, 126.40. Remember, this is borderline about ready to go bullish, depending on what happens with the dollar Canadian by the end of the day. If we close above 126.30, we're gonna have to flip that to bullish. But that's not going to happen if stocks continue higher. It's just not. Okay. Let's talk about the euro. So the euro is weak. The next stop for the euro dollar is this 38% retracement. Now, if you go over to the daily chart and let's look at the lows, post-COVID lockdown lows to the highs, 38% retracement comes in at 116.93. So I will put down support as being 117. I do think we're going lower than that. I do think we're going to 116, but this is going to be support for today if we get there. Okay. One of the other things that I'm keeping an eye on regarding the euro is that we keep hitting new lows on divergent relative strength, right? So resistance today is 118. If we can break above 118, we should get a relatively decent recovery. With stocks as bullish as they are, that seems more likely to me that we go towards 118 today. Cable. So we had a big rejection yesterday at the 50% retracement, right? Here's 50% retracement, underside of the trend line. If you look at our bias chart yesterday, said resistance is 138.75. We went to because that was if it got to the 618, but we did stop at the underside of this trend line. So that would have been the resistance from yesterday. So today it is going to be 138.40. That's key. Whoops. This is bearish. I'm sorry. Now, as far as support for the cable goes, 137.30, wrote down 137.50 because that was just big support down here. But 137.50, did I write that? Then hold on. 137 level. I'm just going to write down 136.65. I mean, that it just have to. I just don't, I don't, you know, I'm looking at the pound. I really don't know what to do with it here other than, you know, it's going to follow the euro lower. As long as the euro continues to drift lower, the cable is going to just get pulled lower. Yeah, I don't think there's a whole lot to do with the cable right now other than just trade the range. Aussie, heavy. This, like the Kiwi, and this is a bearish pennant right here. Now, you know, you look at this setup here with the Aussie, and that's where it points. Okay. That doesn't mean we're going there today, but I think while we're below, let's zoom in here a little bit. While we're below 76.60, we have to imagine that it's bearish, and then support right now is 75.60, and that's key. Because if we break 75.60, then that puts us on our way to you know, 74 cents. And this is where, you know, I know I've mentioned this to you guys before. You know, we do this head and shoulder pattern. I really want to be long the Aussie dollar somewhere down here. I really want to be long the Aussie dollar somewhere down here. It's kind of like being long the euro dollar at 116 and change, you know, or below 116, excuse me. I really want to be long the euro down there. I really want to be long the Aussie down there. But we have to get there first. And in order for us to make our way down there in the Aussie dollar, we have to break some of these supports. Okay. Kiwi dollar looks bearish. Let's, while below, I mean, look at how shallow these bounces are. Super shallow, right? So 70.35. $69.40. That's key because a break below that just sets us on the path lower. Okay, we talked about the Canadian. Let's go over to the Swissy. So I feel a little like a wuss, like a total pansy. I got out of the dollar Swiss yesterday, and I got out of the dollar Swiss at 86 right here. I was like, you know, I was worried about the whole, you know, Nomura Bank, Credit Suisse, the big hedge fund, and I was like, you know, how about if things start to worsen, like a contagion wise, you know, will the Swiss franc pick up a bit? And then I was looking at this chart yesterday. This really freaked me out. Being short Swiss francs, I was looking at the Euro Swiss, and the Euro Swiss was trading back below this triangle. So we were trading right here yesterday. You know, looked like a false breakout. And I'm like, oh, man, I had to just pull it off just in case, you know. And so I took my, you know, dollar Swiss off for a very small profit. And it's like, now here we are, a new trend highs, and I can't chase it up here. And this all happened in Europe. So I didn't, you know, I can't stick around for that. So next resistance for the dollar Swiss is 94.75. support is at 93.70. And as long as we're above that, we have to stay bullish. Dollar yen continues to break out, right? It does. Very bullish here in the dollar yen. Next stop for the dollar yen is, I mean, it's look at where. Let me stop here for a second and check something out. Man. I was afraid of that. I mean, if you look at the next stop for this dollar yen, I mean, it's 112. Okay, well, 4-hour RSI is getting to the, near term overbought, which is going to be up here around 90. So, I mean, we can reach for 111. We can. And I think we have to say, while we're above 109.85, 111's next. So 109.85, 111. Dollar index. We are at the 161% extension. Hold on. Let's take a look at this dollar. So we are at key resistance right now. Okay. 2011 support, 2014 support, 2020 support. We are back at this resistance. I mean, I want to write 93.25 as resistance, and we're at 93.27. Obviously I can't do that because it's right here. I can't do it. Hey, Craig, I will take a look at the Aussie New Zealand for you. Just soon as I wrap up here, I will. Yeah, we're at 78% retracement to next resistance is going to be 93.75. And we're bullish. And I think you have to be bullish. Support right now is going to be 92.90 on dips. First of all, 92.50, 92.90. It's bullish. Dollar Mexican peso is trading kind of heavy. If you don't know the reason why, it's because stocks are still bullish. But I was telling people in the chat room, if you weren't in the chat room, I was like, maybe this is some end of month flow too. It could be end of month, end of quarter. And out of all the currency pairs out there, the dollar Mexican peso, especially, in the G20 currencies that we trade, this is going to be one of the more influenced currencies, right? So right now, 1280 is resistance, and then support is going to be 2280, and then support's going to be 2253. range. US dollar, Norwegian krona, same type of deal. Like it's just crude oil looks weak, and I still think we're building this wedge. So rallies, well, resistance intraday is 863, 862. Support is 852. I think is what we wrote yesterday, 853. It looks like we've been as low as 852. So I'll write down 852. And it's range bound. Gold and silver look like hell. They do. Especially gold. But, you know, if you look at silver, silver is approaching that $24 level, and a break below that brings in $22.35. Oops. Resistance is futile. Joking. 25.35.
It is a good Star Trek joke, though.
What's that?
It is a good Star Trek joke, though.
Resistance is futile. Okay, so notice gold below 1675 targets 1646. So 1646 below 1675. It is bearish. Silver doesn't turn bearish till we break 24. So now any rally should be capped. This comes in at 1700. This level right here and this level over here comes in at 1706. So I'm going to write that as being resistance today. Okay. Bitcoin. There's some news about Bitcoin, and one of the reasons why it's really holding up very well. CME is going to be doing micro futures for Bitcoin. Okay. You know, it's holding up pretty well. I'm actually surprised that it's holding up as well as it is. So, you know, we have resistance of 60K. I mean, we're right there. Here's the 78% retracement that we're testing. I still think 60K is going to be resistance. Oops. And then obviously 50,000 is really key support. And I'm going to keep it on bullish here, especially while we're above that 50,000. All right. Bias chart's done. So there you go. Just so you guys know, it continued rotation. It's continuing again. Dow's up, NASDAQ's down, S&P's flat. Rotation, rotation, rotation. There's no broad-based
market
selling.
Participants seem to want to be somewhat more defensive.
Yeah, I mean, you know,
makes sense. I mean, it's not illogical.
As rates go higher, NASDAQ stocks are suffering, and the Dow is holding up. I mean,
it's not only rates. If you look at it objectively, right? I mean, what is the tailwind in stocks at the moment other than what has been for so long? I mean, monetary policy. Is there anything else we're expecting that's like, you know, positive for stocks? Even in an infrastructure plan has probably started getting priced in somewhat, you know what I mean?
Yeah.
So we've rallied so intensely during the past year. We've had practically zero pullbacks by mostly, if not exclusively, multiple expansion. And now what? I mean, yeah, I mean, you know, the risk reward is just plainly stupid. Now we have like some jitters from the fund and all that. So, you know, a lot of market participants want to play safer. I mean, they want to take some profits from the quote unquote growth stocks, although, you know, they're growth only in name. And, you know, play more defensively because they don't want to get out of the stock market because they've learned their lesson. So yeah, I think this will continue until we actually see a decent rotation, decent correction, and these people can feel safer that valuations are somewhat better, so they can pile on growth stocks once again.
Yeah. Well, I think maybe one of the things that might suggest that a correction's coming is watch. I think the Aussie and the Kiwi are trading really heavy. I mean, the Euro's
VIX
obviously
diverging as well.
What?
The VIX is also diverging.
Oh yeah, the VIX has been very divergent. I think Grega put in a good chart yesterday in our chat room, and I'll just show you guys really quick. Then I'm going to cover the Aussie New Zealand for Craig, and then I'll give it to you. But let me just show you this really quick from yesterday. This is Grega in our chat room, just so you guys see it. This is like here it is. He was just saying that some of the emerging markets are breaking down.
Breaking down,
breaking
yes.
down. S&P's got a wedge. VIX is holding up really well above 20, and so that's something that should have everybody's attention too. So these are warning signs, not necessarily triggers to be short risk, but I think you got to be careful here. And I think one of the ones, as Steve just pointed out, was that I think is really important is this VIX. I mean, volatility, Steve. We are nowhere near the lows.
Nowhere near, yeah.
Nowhere, and that's got to be. I mean, even the guys that I used to trade with, they still talk about like, hey, we're gonna buy some puts on the VIX because any day now we're gonna drop back into the teens. Any day.
I don't see it likely. No, not yet. I don't see it likely. Not yet.
Well, that's the thing is everybody's trying to lean on this, and it's not working. And so there's a chance that the VIX really starts to squeeze, and if it does, that's gonna weigh on risk. So real quick, I'm just gonna go over to the Aussie New Zealand. Craig asked if I take a look at it. My attitude is the same as yesterday. We were as we're hitting this 161% extension, intraday relative strength is divergent. We hit new highs. RSI didn't. I think that you got to look at buying dips down here if you're a bull, right? So these levels down from 108.50 back down to maybe the 108.30. That's the price that you probably want to be a buyer of the Aussie New Zealand. And if you're a seller and you're like, I just want to short it, then I would wait for probably a bounce up here, back above 109.10, and then you can manage your risk better from up there. That's the way I would approach it. Okay. So there you go. Steve, I thought I'd pass it over to you.
Thanks, mate.
All right, guys. Hey, have a great one. Oh, and Alexander has I believe you meant 20 and not 22.80 for the dollar max. Did I write down? Oh, yes. You know why that I wrote that, Alexander? It's because
you're in love.
That's where it's going, is 22. Just so you guys know. So yeah, that was a typo. I'll fix that. And then okay. Yeah. Craig was looking at something else regarding dollar yen. Okay, guys. Hey, Steve, have a great one. Everybody else in the chat rooms, and thanks everyone. Stelios is he had to run an errand, so
yeah, I know. Did you take a screenshot of the?
I did. I got it.
Okay,
got you taken care of. All right,
perfect.
See you guys.
Bye, mate. So here we are. Let me open the question box. Now, I'm going to stick a little bit on the 4-hour charts. So this is what we were talking yesterday, having to do with the DXY, that the DXY itself looked bullish in the short term, while some of the other currency pairs were, not showing the exact same thing. So the DXY has, clearly broken through this triangle and has already pushed above the 161.8% extension of this larger correction consolidation that we had. Now, a good idea would also be to fib extend this, the first leg higher to the second leg higher. That has an implied target of equality of like 94, like 12. Now, another thing I mentioned yesterday was that crude oil looked like a good sell in the short term, and it's been playing out so far. And I think it has the potential of playing out a lot further than it has already done. So for the time being, it got rejected from this consolidation. I think it's corrective. I mean, it's corrective within a larger correction, because I do think that the trend remains higher, but in the short term, I think there is more downside to it. So we break through this trend line, so basically through 58, and I think that the next stop is going to be roughly at 54. And I think it still looks appealing against, these highs at like 62 and change. So I do think that crude is one of the better looking out there. Now, gold broke through a corrective consolidation as well, right? So more downside here. Same with silver. We had, a clear like pennant. Now, a quality target to this move wouldn't be far away, but in any case, I'm looking towards 22 and a half. We're, as we speak, we're testing this spike low, but I don't think this is going to hold for a long period of time, right? So I do think that silver should be headed lower. And as I said, I think that what's missing from the mix is some risk off. That should not affect that much the euro and the pound, but it should definitely give a kickstart to the Canadian, Norwegian, Australian, New Zealand dollars, so on and so forth, for them to accelerate to the downside, right? Now, for the time being, I still see the move lower as quite orderly, right? Here's the Aussie, for example. Now, the only exception to this is the Kiwi, which had that major down day last week I meant. But other than that, everything else has been very, very orderly. Look at today's candlestick in the Kiwi, by the way. Quite a bearish one. I think it just wants to resume lower. Now, Blake already mentioned, USD CAD, USD NOK. Nothing has changed for me here either. I mean, USD NOK hasn't broken higher yet, right? USD CAD is attempting to do so as we speak. So perhaps it might be leading by a little bit. USD SEK broke out yesterday. So, there is some movement, but, I think that some risk off is going to make all that really, accelerate and, produce some type of an explosive move. Here is USD yen as well, which is, I drew this like when we were breaking out from this channel, and so far it has worked out really perfectly. Now, if this idea I had about how USD yen might work out after breaking through the channel indeed plays out as I originally envisioned, which more or less it has been doing. So I would expect that sooner rather than later it should find some kind of a high before it produces some type of a bigger pullback. And obviously, for something like that to happen, once again, the catalyst can and will probably be a move lower in risk assets, right? That should tame somewhat the move higher in yields. Here are the yields, by the way. Look at the yields. we were talking last week about the potential of this being an ascending wedge, and this hasn't changed, right? We posted the higher high, but look at RSI, right? So perhaps this was the third drive, as Dale would say, because we had one high here, a lower high there, and as you see already, substantially a lower high here. So, I mean, some risk off, and we should see a temporary move down in yields that should spill over immediately in the USD yen and should also spill over immediately in currencies that are well correlated with risk, and that should get the DXY more bid. I don't think it's going to spill over so much in the euro and the pound because they're also going to have some risk of inflows. So subsequent to that, I think that what else is going to happen is we're going to see another leg higher in these type of cross rates, right? The Euro Aussie, the Euro Kiwi, the Euro CAD, the Pound Aussie, the Pound Canadian, which has already broken out, by the way, from this channel. So, it seems to be leading the way because of, the extra weakness we had in the Kiwi. So, I think that if that happens, what's going to be happening is these crosses are going to be flying, at least temporarily, right? So this is what I'm looking forward to. And to be honest, I'm just, tingling my thumbs until that happens because I'm this move so far is really not inspiring to me. I mean, I see the potential of more dollar strength, but I don't want to be going counter trend in a move that doesn't have the legs to run unless we see some risk off. You know what I mean? So because I do think this is going to be a counter trend move, right? Now, Stelios thinks 96 is a good area, and I agree. Before that, though, 94.70 is an important area for me. It's like several confluence of resistances up there. So yeah, I mean, we have more room to the upside. There is no question about it, and still a lot of people are short dollar and long risk. Let's hope we get that spark, that catalyst, because that's going to give us enough volatility to actually, make it worth trading it. At least in my opinion, and having to do with the time frames. Twiddling. Thank you, Baruch. Yes. Natural gas, palladium, platinum. Listen, platinum to begin with is holding up very nicely. Let me find it. Here it is. Look at how nicely platinum is holding up, right? I mean, a very, very orderly move lower and folding in a very corrective manner. So my thesis remains the same. I think that platinum has a lot more upside to go. Now, there is the potential to see a lower low before we break out, right? You see, as long as this channel is holding, we might see this type of a move. So I wouldn't be buying here, right? Not unless we break through the channel. But I do think that it's holding up very nicely, and I think that's indicative of what's coming, once, this correction is over. I think, there's going to be a massive move higher once again. Now, here's the daily view, by the way, on gold as well, which I want us to see. Watch this channel. We're approaching it once again. Support passes from like 1660. That's gold, by the way. So this is definitely going to be a first area of support. And here's silver. And, the major area, as I've said, is like 2240, 2250. Nice confluence of supports. Now, you asked about natural gas. Here it is. Holding up quite nicely above the broken channel. It hadn't been doing anything wrong yet. Now, I don't see an impulse to believe that we've started moving higher once again, but I do think that it's a matter of time. I think that as long as the dollar remains well bid and the rest of the assets are moving lower, natural gas shouldn't like accelerate to the upside. But as with platinum, more or less, I believe that there is a lot of pent up energy here in this market. So I think once the dollar starts depreciating once again, I think natural gas should explode higher. Now, having to do with palladium, perhaps a corrective move unfolding here. My thesis hasn't really changed. We've broken out from this triangle in an impulsive manner. I think that above 2,500, there is absolutely no reason to be bearish. So keep that in mind. Blake, which have your resistance? Okay, yeah, that was for Blake. He already answered that. Okay. So that's more or less what I'm paying attention to. So, your turn now. There were a few questions. I already answered them. Tell me what else you want to see. Copper. Yeah, absolutely. So copper, look at this. Coiling, right? Now, this is not necessarily a triangle, right? Why? Because it can be a channel. Keep that in mind. So two interpretations here, both are valid, until proven otherwise. So, we might move lower and produce a lower low here, or we might just straight break higher. It's all going to be based on risk appetite, right? We know how sensitive copper is to risk assets. Listen, many times, Lorraine, we see the market not following fundamentals because it is already discounting them. So having to do with crude, for me, the technical picture is more important than the OPEC decision. And the technical picture is that we've finally broken out of a channel after a very, very prolonged uptrend. And I showed you before the 4-hour chart as well. I think that crude is in need of a deeper correction. And most likely we're going to be getting it before we resume higher. I do believe that crude oil is going to be much higher given some time. Having said that, in the short term, I believe the path of least resistance is lower. TSL, absolutely. What is it? TSL. Whoa. Steel company, eh? Yeah. Yeah. Oh, then TSLA you want to have a look at. Okay. So, I think it looks very heavy. I think we can easily see that high at 490 being tested soon. At the very least. At the very, very least. So I think you should keep looking lower. Now, admittedly, corrections are a little bit tricky. Who knows? We might even see a triangle unfolding here and afterwards producing another leg lower. Keep in mind, if that's the case, if you see a triangle forming here and spending more time consolidating, you should expect that the next leg lower is going to be longer than just a retest of 490, right? So if you see Tesla spending more time consolidating there, the most likely scenario is that we will eventually break down, but correct even deeper, perhaps 380, even deeper than that. My pleasure, Alexander. Okay. Anything else, guys? Any AA? Okay, AA. If I saw right, yeah, AA Alcoa. Looks very good. Looks very good. Nothing has changed since the last time we had a look at it. It looks very well bid. Yeah, there are some RSI divergences, so there is a chance that this is some type of a, corrective move. So we might spend a little bit more time consolidating here, but I think overall it looks very well bid and for a good reason. And I think that eventually we're going up to 40 sooner rather than later. Block, sure, block. Oh, that's a very bullish chart. That's a very bullish looking chart. Now keep in mind, this might take a lot more time to unfold, right? So keep that in mind. So I think overall looks very bullish, but in the short term, I wouldn't be touching this. Okay, Didier, that's what I believe about it. My pleasure. Anything else? Gold and silver miners at these levels. Yeah, absolutely. Let's have a look at them. Look how well they're holding up, and look how they're diverging from gold, right? For the time being. I think they're holding up quite nicely. I think we can see this corrective move unfolding further in time because there is no chance that gold is going to be under pressure and silver is going to be under pressure and they're going to be like posting new highs. But I think that overall there is no way to technically question the move lower and its corrective characteristics. So I can't assume where we're going to find the low. But if you're asking me, I believe we're much, much, much closer to the low than we are to the previous high, right? In all of these indices, like gold miners, gold junior miners, silver miners, junior miners. I mean, it's more or less one and the same. So, according to my point of view, there is only one way to trade those. Start slowly scaling in and wait for the explosive move higher. Because in my mind, my general thesis, if I have to summarize it like in a few sentences, is the following. The market, once again, is making a huge mistake in its assumptions. What is their mistake? The market is discounting that there is a high chance that there is going to be inflation coming through. I agree with that assumption. And they're assuming that that is going to force the hand of the Fed and the rest of the central banks. That is the part of the assumption I disagree with. I think the central banks have painted themselves in a corner and they have absolutely no intention to doing something about it because they're going to blow up the fake economic recovery. So what I think is going to be happening is that we're going to see inflation coming through. Part of it is going to be hidden by the fake economic data keeping of inflation, right? And part of it is going to show up and the Fed is going to act like this is exactly what they want. So they will pretend they're happy with it so they don't have to do something about it. So I think that's where the market participants are mistaken in thinking that the central banks are going to be forced much sooner than they admit to hike rates. I think they're going to stay behind the curve. And I think that's why we're going to see a lot more dollar weakness before we can see some dollar strength. Because once the market realizes that inflation is coming, but they have no intention of doing something about it, then there's going to be a big dollar sell-off. Because, of course, when you have inflation, but you don't have yields to compensate you for, you don't want to be in that currency, right? That's my thesis. And that's why I believe gold, silver, and the equivalent miners are going to fly. Because central banks are going to have to keep expanding their balance sheet massively, especially I believe this year is going to have, before the end of the year, we're going to see a massive expansion of the balance sheet, massive. and they're not going to do anything about rates. They're going to stay at zero. And once market participants wake up to this reality, they're going to be buying miners, silver, gold, and everything that is tangible, using both hands. Okay, that's it for today, I guess then. So have a lovely rest of the day and cross your fingers that we get some volatility. Bye-bye.